Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is August 5th. I've got Jace with us here today. We're going to talk about the cattle market. How's it going today?
Good.
Awesome. Well, we're going to get started here. So let's talk about this futures market on the cattle here. We put in a high somewhere around the middle of June on the cattle market, and then we had a really steep sell-off pretty much from June 15th until July 15th. We didn't have a green day. It was a lot of consecutive red days. And I wanted you to walk through why we saw some of that weakness and then why we've kind of found a little support here lately to really set us up for why this market has been a hard one to analyze as of late and why this little rally now has us sitting in a bit of a tough spot.
Yeah, so I think we've looked at since the beginning of the year pretty much with the placement numbers and the cattle on feed numbers that beef production was going to get similar to a year ago around this August timeframe. So that's kind of been in the back of everybody's mind. We'd seen Cutout put in highs for the year back in March and then didn't reclaim those highs at all in the rally in June and into July. So like last year, your first high was put in July and that's seasonally normal, and then dipped and then put in another high, put a year high in like in September, so later than normal. And we didn't see that this year. So you add that on top of the beef production that's coming down the pipe, and you didn't put in new highs on the cutout. You've got weights that are heavier, you've got higher imports, and I think just all of that together had people nervous. And then we started running into some bigger cattle. So we saw the cash market fall, we saw bigger show lists, and that just kind of all added on top of it.
That's a great setup for this. I want to go a couple steps deeper, though. I want Kate to take us through a few more of these slides and just take it another step deeper. So explain to me what you've seen in particular in the cutout with some of these other factors fundamentally, Jace, to just kind of break down for us.
Yeah, so the cutout, like you have outside influences like oil prices being really high this spring. You never saw your cutout really get above last year's level during the summer, and just kind of feel like we've raised our imports by like 5% year over year, and that makes a huge difference, especially when they aren't labeled. When you go to the grocery store, if you get a Argentina beef patty, you don't necessarily know that you are. So
there's no origin labeling at all.
There's no country of origin labeling, and if there is, if it was processed here, it looks like a U.S. label. So it's just there's a lot of discussion around that on the cattle guys' side. You know, they would like that changed, but you have that piece of it and just more imported beef, and so you forced the cutout lower. But I will say that even with all that, even with similar production now, it's still lower than last year, but closer to normal or closer to last year's production. And you do still have a beef cutout that is similar to where it was last year. So there are good things in this market.
And that cutout acting pretty seasonal at this point, right? We bottomed last year at an almost identical price, finding a little bit of support here. Very seasonal. Normally, this is a pretty good little run here for a little bit on this cutout, so hopefully we can get some good news in there. Talk to me a little bit more about the cattle we lost in this heat.
Yeah, that's a very... nobody really knows the number of what we lost, but the numbers of, in the 30,000 number area has been thrown around, and that does matter because you probably aren't losing 1,000-pound feeder calf. You're losing
the big one.
You're losing the big one. So it hurts the pocketbook, but it also probably helps the cash market for a little bit here because you've got to buy that many more in the cash market.
It was also announced recently that the border would be reopening on August 24th. I want to use this discussion to break into the funds a little bit here, because do you think that opening news has just given the funds the ability to not have to worry about it anymore? They know when that date is. Now we have the potential to screw it up and not open up, which would be good news, right? Technically. So tell me a little bit about how the funds have been acting lately in light of or following that announcement, and they've trimmed a little bit, haven't they?
Yeah, they absolutely have. And I think what you're seeing is, just like you said, the border opening has been this piece that we didn't want to think about. It's going to hurt the market. It's going to hurt the market. And so they've been selling off into that. And now you have the announcement, the procedure, that Douglas, Arizona is going to open. That's about 20% of our live cattle imports. If you just look at that, our feeder cattle imports from Mexico, if you just look at that port. So you kind of know the breakdown of numbers and how it's going to go. And from here, how they're reacting now is that the news could really only get better.
Yep.
that you have a screwworm case at the border crossing and then you shut it back down, or that sort of a thing. So it's kind of a known as to how that thing's going to open, and they have to be held there for a certain time period. And so there's a little bit of an uneasy feeling for guys thinking about buying from there, not knowing, what the shrink's going to be, what they're going to be fed when they're at the border, just uncertainty around it. So I think for the funds, that's a bright spot that we know what that's going to be now, instead of this cattle market has just been a world of unknowns.
They still have some that they could trim on the funds, so keep an eye on that. But I want you to explain to me a little bit about, just in general, why this market has been a really difficult one to analyze as of late, and then just talk to me a little bit about the tough spot we're in right now.
Yeah, well, just like we were talking about those cattle lost in Nebraska and Kansas to the heat, the number not really being known, not knowing. It's a tougher market because you can, pigs you sell in a certain time period. You
Yep.
kind of know when they're gonna go out. These cattle, especially lately, we've taken them to such big weights that if they really wanted to slam the packers with inventory, I mean, they could sell them all down to 1,500, and that would add a couple. That would add a lot of meat, And so we've our cattle on feed numbers have gone up because we probably do have more on feed just because we have the bigger ones in addition to all the other ones that are on feed. So it's a tough one from that side because they can be selling anything from that in that weight range can completely change. And as long as the producer feels like they have the leverage and they can hold them for another couple weeks, then they have the leverage. When they feel like they don't. It's pretty much what it is.
Talk to me a little bit about why this price point is hard.
As far as on the just
profitability where
Yep.
we're at, because like when I look at this, we've rallied back up. We're close to the 50-day moving averages on a lot of these. You could look at a few different technical things. We've got some gaps that we've almost got back up to fill today, but it's not quite enough, right? I mean, I have a lot of cattle August through Oct that are in the 230s on break evens. Like you're almost there to be okay again, but you're not quite. So you're at a tough spot where it's like, do I try to just lock in a minimal loss today, or do we roll the dice and try to get back to some levels that we were at before?
Well, the easy answer is, the reason it makes it hard is the last few times that they feel like they've missed it, it's been followed by new highs. So that's why it makes it a tough decision. If you were just looking at break evens and thinking that you'd made really good money on the past few and you're at break even here and you feel like there's quite a bit of risk, well, then you'd lay it off. But there are also some technical reasons or technical resistance points here, like the gap in October and beyond on the fats. And you just have a few of those headwinds now that are going to make it easier for people, the funds, to sell at those type of price levels instead of continue to buy it.
we're going to wrap up the podcast here just with you giving our listeners their final need-to-know items here going into the rest of this week.
Yeah, so feeder cattle prices have been really high in the barns. Break-evens are still really high. It's tough to manage those. We are, looking at next summer and that sort of thing. There are options on those cattle when you look at the insurance products and those sort of things. But just being careful. I think corn's a topic that needs to be talked about a little bit. Corn in the 460 area on Deese is still relatively cheap when you look at break evens or when you look at cost of gains and that sort of thing. So just protecting the corn and protecting the price of these cattle, I think, is very important here.
All right. Well, thank you for your time today. Please click the description on the link below there. That'll take you to our website. It'll have fantastic things like market research, daily market commentary, along with many of our other tools, including the crop tour that we've got going on right now as well. Hit the subscribe button. Please get in touch with us. We would like to talk to you about each and every aspect of risk management advice. So thank you for your time today, Jace. We'll catch you next time.
Thanks, Mike.